SwissBorg is now the official partner of my channel, so you can buy, earn, stake, sell, all in one secure mobile platform. Download using the link in the description, deposit €50 or more and you'll receive up to €100 worth of their native token CHSB. SwissBorg! Hello everybody, welcome back. So we're going to talk about inflation, which is going to be pretty boring, so be prepared. Hold your breath and let's see if we can get through this, and I'll make I suppose the way I see it going. This is US inflation, not Europe or UK, so just US. So the way that it's going, as far as I can see, this is your Dixie chart. I think I'm gonna put it out there, right? This is what I think is the most likely scenario when it comes to Dixie, which will correspond to any kind of crypto or stocks or any kind of major position, right? So as we all keep hearing about, you know, recession and this, that, and the other. Recessions are normally a time to actually position yourself in assets, whether it's property, stocks, whatever. It's normally the best place. Cash at that point, when a recession kicks in, is usually the last place you want to be. So as we get closer and closer to the actual recession kicking in, the American recession, the more excited we should be. It's like a counterintuitive trade. You know, you think, oh, recession, let's put my money under a mattress. Well, I wouldn't do that. I wouldn't do that. So this is, I'm going to boil it down like this. So there's a few things to think about. So inflation, as far as I can see, is likely to stay relatively high over the next 2 quarters, right? So over these winter months, the winter period. The reason being is that oil, for me, is the main thing now that everyone has to focus on. Food and fuel is oil. Oil is food and fuel. So food can go up, it can go down, it can do whatever it was, but the price of food is often increased by the price of oil because transportation costs for food takes oil. So oil prices correspond to food prices. So I've been looking for this chart to move back up again, which I'm pretty sure it will. This is oil. It's being held down at the moment by a strong dollar, right? So this is the tricky part to try and think about, right? So dollar's going up for all the reasons that we know. So rate hikes, dropping of other currencies like pound and euro, we see it all the time. So that corresponds to a strong Dixie. That's likely to continue. Rate hikes are going to continue, whether they do 75, 100 or whatever it is that they decide to do. However, there is likely to become a natural peak take place on this. It might not be a peak that absolutely peaks the absolute top of the Dixie, but we've recognized the bearish divergence on the weekly. We've got it on the daily, and this giant ascending channel formation that we've been in for about, was it 22 years or so, where we do see decent pullbacks from here. They might not be absolutely crippling collapses, although they have been pretty dramatic and long lasting, but they do, it has found decent rejections on this trend line in the past. At least 3 very significant ones. Okay, so 1, 2, 3. We would be approaching that, you know, quite soon. This takes us up to about, you know, 113, 114 kind of area, depends on when we do it. And that's where I would expect to see a natural peak take place, and maybe that corresponds to the bearish divergence on the weekly at least. And then that would be maybe a natural top on the Dixie. If we think about how long this might take, because we're looking at this on a weekly, this could take a couple of months. Right, so into the winter, as October, November, December, we're still scraping this kind of top of this channel area. February into the 4th quarter of 2023, where we could start to see it actually coming back down again. So what would cause that basically? So oil is, in my opinion, likely to benefit from a weaker Dixie. So this is where things get a little bit complex. So if we see, for whatever reason, the Dixie kind of holding this kind of level where we are right now, or rejecting sooner rather than later, so if we peak up to this level sooner rather than later, then you'll see a spike in oil, right? Oil will spike. Oil will probably go back up to 100, 105, maybe even beyond there, because oil is actually desperately wanting to move up, and on this chart, it definitely wants to move up. I took another position again here yesterday, and I'm hoping to sniff. This is the one that will sail back up to 105. The last one I had to close around 88, But again, rinse and repeat this trade, rinse and repeat the oil trade. So what we'll be seeing maybe would be that the Dixie sort of finds a little bit of a peak around here, comes down in the short term, gets picked back up, and then moves back up again because oil prices have gone up, and that will correspond to higher inflation again. It's only when we get a peak in oil, another peak, that we'll see inflation come back down again to a larger extent. And these next 2 quarters that we go through now are going to be, well, there's going to be a lot of demand on energy. So energy and oil correspond as one. You could think about the 2 charts basically moving through association with each other. For those of you who trade crypto, which I'm sure most of us do, you see this sometimes with a healthy Bitcoin goes a healthy altcoin market. So with an upside in things like natural gas, heating oil, you will start to see the futures be traded for oil as well. So through association, oil will go up. Oil can be manipulated though. Of course it can, just like the Dixie, it's manipulated by the Fed. OPEC have a good hold on oil prices, so does Russia. So there's lots of reasons to think that this might go up through manipulation or stay low through manipulation. For the US and Europe, they want it to stay low. They'll try and manipulate it to whatever extent they can to keep it low, because that keeps their inflation low. So long as oil stays low, inflation will start to tail off slowly. But if it goes up, inflation will spike again, and the rate hikes will get more and more aggressive. But I'm predicting effectively, though, that by the end of the first quarter next year, we will have found a peak on this Dixie. We may see it sooner than that, but we will probably see a peak on the Dixie by the second quarter, and that would make sense as far as recession is concerned. We should be in full recession by that point. There's no getting away from it, and you want to be in assets through a recession. You don't want to be in cash. At the moment, cash is definitely king. Holding cash is definitely that. Well, holding dollars is definitely the place you want to be. But as we approach the top of this area here, and the word recession becomes inescapable, and we likely start to see a peak in inflation and an actual drop in oil prices due to supply demand as the winter months, I suppose, get warmer really into next year. Then that would be the absolute peak, and this would be for the major rotation that would lead us into a full bull market across all assets. And everything will start to go up again. So the bear market will likely come to an end around here. So there's fundamental reasons which should bring us up to this trend line. So the inflation continuing to run high, Fed continuing to increase rates, and oil going up as well. And then when we find a peak on oil, we find a peak on Dixie, and recession gets fully kicked in, this should start to tail off. Now, this tailing off, could be like the ones we've seen in the past. We saw a nice rejection here, sort of continued down until we found our next spike. And again, these are several years apart from each other, 2015 to 17. Found a nice big peak around here and came back down to the bottom of the trend line. Again, this is several years apart. This is 3 years apart from each other. So if we see ourselves moving up to this level around here at some point in January, find a peak, and then start to get rejected, maybe over a period of years, maybe into 2025, where we're looking for the next major peak of a crypto bull market. That's what we should start to be thinking about, and this is probably going to be the one of the main ways that we could think about positioning ourselves back into anything once again. But again, this doesn't have to happen. Like I said, I feel as though it's the most likely scenario when you boil down the inflation, recession, oil prices. So we're looking to see an increase in Dixie, an increase in oil prices in the short term, moving inflation up higher, and then we actually go into a full recession, a proper one, and that might be a hard the hard landing that people were referring to, because inflation is making another high based on food and fuel, based on oil, over the winter. So in the fourth and first quarter of next year, a new peak of inflation, and then it will start to really tail off extremely fast, because the demand for oil will be less, the demand for energy will be less, recession will have kicked in, a hard landing will likely have been felt across the stock market and crypto as well, and that marks the absolute capitulation, the hard landing that people are looking and waiting for, that we could easily get when you merge all these things together. So it doesn't doesn't have to happen this way. I just feel like it's the most likely scenario. Whether you decide you want to start, dollar cost averaging in as we approach this level, or wait for what could be a hard landing, which doesn't have to happen. Obviously, it doesn't have to happen at all. There could be some serious changes to the CPI coming out over these next few months, as if we see oil going up. So the clue and the key would be to see oil breaking out. At the moment, it's unable to really do that. It's trying to go for it, but oil breaking out, moving back up into the 90s, and certainly if we reclaim to 104, then we probably will go on to make a new high on oil. And this is the sort of thing that would cause a hard landing, because inflation would definitely go back up again in the States. We would have a higher inflation. It would probably find a peak then at that point, and then very quickly after that, inflation will come crashing straight back down, because demand for oil will be less, food and fuel goes down, everything goes down, rate hikes go higher, recession kicks in, hard landing, the lot. It's the perfect storm to find the perfect bottom on any asset, whatever it is, whether it's your housing as well. It'll all trend with the hard landing. And then you buy your house, you buy your stocks, you buy your Bitcoin, you buy the lot. But for the moment, this could be a run-up, which takes us up to the actual peak inflation, which then, rather than seeing these measly little fall-offs, drop-offs bit by bit by bit, month after month after month, we'll see significant decline in inflation moving into next year. So like I say, I know everyone's skeptical of the Fed and this, that and the other. I think they're more or less doing it right. They're kind of going straight down the middle, not too aggressive, not too timid. I think from the position that I stand in, they might as well carry on like this, because there's so many other factors outside of just simple rate hikes and quantitative tightening that will go into inflation. I expect it to probably go up throughout the rest of this year, finding a peak somewhere around December-ish, really. That might be where it finds its peak, basically, roughly, and then start to tail off slowly, and then a dramatic drop. So long story short, next year, bull market all over the place. There'll be a bull market in everything, bull market in housing, crypto, stocks, the lot. It'll all be bull market. So this is why sitting around in a cash position at this very moment in time is not a bad idea. We've not reached our peak on the Dixie. We've not reached our peak in inflation. Oil, I think, is the only thing that I'm willing to really trade personally, because I'm waiting for it to actually make this move. And then once it's done, oil will, just like we got the everything bounce based on the oil peak last time. I said, look, we found a peak. This is it. Everything bounced. Let's go for it. And we caught the bottom on stocks, crypto, the lot. I think we'll be looking for another everything bounce, and it will be given to us simply by the fact that oil has reached its peak, marking effectively the peak of inflation, really, which I don't expect to see until later on this year, maybe the very beginning of next. But by the second quarter next year, it will be a full ripping bull market across everything. That is my expectation, and I'll stick with it. I know it's one of those videos that you're like, well, I'm gonna have to wait 6 months to prove you wrong this time, but look, it is what I think is the most likely scenario. It doesn't mean it is the only scenario that has to happen, but I think it's the most likely scenario, and so good times will be ahead. But make sure you have cash waiting for either a hard landing or a peak in oil and Dixie at the same time. Right, thank you for watching. Hope you have a nice day. Take it easy.